This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed. We are across Bloomberg platforms, radio, TV, YouTube, Bloomberg Originals. It is Monday, July 27th, 2026. Man,
that's it. That's good. This is it. This is it.
I was sitting
Summer's over.
I was in the makeup room this morning. I'm just like, summer's over.
Yeah.
I can feel fall. I hate to do that.
It's,
I know.
But look, there's a Fed meeting this week.
Yeah.
Can't forget about that.
No, you're right.
Jackson Hole next month.
Right.
Kind of signifies the end of summer in my book, I think, for a lot of people.
I feel like that's the last hurrah.
And I think a lot of people
on
Wall Street kind of go places in August.
You're going places, I'm going places, right? Like, I just kind of can feel
We're
it.
in Midtown, though.
Yeah.
We're not on Wall Street.
That's so true. That's so true. So, all right. So what's on our mind? We do have a market that is definitely lower off our worst levels of the session. Check out something like the Philadelphia Semiconductor Index, the SOX, down another 3.5%. I mean, kind of slippery little sucker, because up it goes and down it goes.
Yeah, it's actually down more than 20% from that high. That was just about a month ago on June 22nd. We've got a lot to talk about in a week that's packed with the Mag 7 and AI-related names that are reporting this week.
Yeah, and so this hour, what are we going to do? NVIDIA's $750 billion in deals, reigniting that circular AI fears, and I think rightfully so. There's a great chart. We put it out there from our Bloomberg team. We're going to bring it out again. So we're going to get into that with Ed Ludlow, who actually caught up with Jensen.
Yeah, looking forward to that conversation in just a few minutes. Plus, let's give peace a chance, or so it seems, as President Trump pauses U.S. strikes on Iran. We did see some market action that was indicating a little bit of a reprieve, but that kind of went away a little later in the morning. The S&P down a little more than 0.1%.
Trying to get to the reality of it all. Hey, also AI and workers. We don't get another monthly jobs report until a week this Friday. Having said that, when it comes to AI and workers, there are so many workers who are fearful about what it means for their jobs. Apparently, according to a new survey and something written up to in the Harvard Business Review, there's a certain way of interacting as a worker with AI that might give you some job security. So
Don't call it a clinker.
Don't call it a clinker. Yeah. All right, folks, let's get you going on this Monday. We've just got a couple of hours to go. Here is Charlie Feller.
All right, thank you very much. I'm keeping an eye on crude oil because crude right now is tumbling below $89 a barrel on Brent, 88.56, down 8.5%. West Texas Intermediate crude, 82.40 a barrel, lower now by 7.7%. Very often when we see oil decline, we see stocks rally. Not the case today. We've got the S&P right at 7,400, down 12 right now, down 0.2%. NASDAQ is down 0.4%. The NASDAQ 100 index down 0.6%. But interestingly, the Russell 2000 index of small cap shares up 0.4%. All of this with the Dow up 0.3 and a 10-year that's currently yielding 4.64%, the 2-year 4.31%, and the 30-year 5.13% on the 30-year. Gold up $24 the ounce to $4,073, up 0.6%. West Texas Intermediate crude, as we mentioned, down 7.7% right now, 82.40 a barrel. A lot of big tech names moving lower today. As I mentioned, chip stocks lower, but earnings will be very much in focus. Specifically, we got 4 of the Mag 7 names coming up this week. The A's, Amazon, Apple, they report on Thursday. The M's, Microsoft, Meta, they report on Wednesday. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Carol and Tim, happy Monday. That's a Bloomberg Business Flash.
All right, good stuff. Charlie, thank you so much. We're going to come back to Charlie certainly throughout the hour, the next 3 hours really, on Bloomberg Businessweek Daily. All right, feels like we've been here before, and yet to be fair, bringing war to an end is complicated, even if you started it like President Trump in the United States did. And on that, President Trump said he decided to pause strikes on Iran to give negotiations another chance, minimizing the prospect of a potential military escalation of the war. Said earlier on Air Force One, too, that he's got plenty of time and that they are having good talks with Iran.
So the question that a lot of us are asking right now, is this real progress? Is it different this time around from past pauses and proclamations when it comes to these so-called peace deals?
Yeah, a lot of questions for us, and I think for everybody who's out there. Hey, Bloomberg Economics, economic statecraft lead, Chris Kennedy back with us, tracking it all. He is in the Bloomberg News Washington, D.C. bureau. Hey, Chris, good to have you here. I know we always give you a tough task to make sense of what is going on. President Trump said very deep talks are taking place with the Islamic Republic, and if they don't work out, we will go back to very strong military action. Iran's foreign ministry spokesman said no formal negotiations are currently taking place despite what we got from President Trump. What's the reality here? What's the intel? Do we really ever know what's going on here?
Well, yeah, that's a great question.
We always give you a tough task.
We don't ever know.
And yet he keeps coming
what's
back.
going on. Yeah. So looking at the markets, we saw a big drop in oil prices today and last night when markets opened. I think that those markets are pricing in a sort of tactical pause. But as you mentioned, equity markets are not necessarily responding in kind right now. And so I would interpret that as the markets don't think that this is a real sea change, but we do expect there to be a pause for a few days at least. Trump is hosting Israeli Prime Minister Benjamin Netanyahu this week. There's a lot of other things happening, but we do expect it'll be very difficult to get to a place where, for instance, the Strait of Hormuz reopens for traffic. The U.S. is still imposing its blockade. It's still turning away ships, and Iran is still targeting ships that don't abide by its rules for transit through the strait. So getting to that level where we're back in a place where you basically have free movement like we saw after the MOU was signed, that's going to be more challenging.
Chris, the equity market's not buying this, but the oil market seems to be buying a little bit. We're seeing Brent down a little over 8% right now. WTI down 7.7%. Both of these, though, above $80 a barrel. Brent's closer to 90 a barrel than $80 a barrel. Why is in your view, the oil market reacting, but the equity market's not?
I think the equity markets are just being swamped by the other things happening this week. We've got some big earnings. We have the Fed decision on Wednesday. And right now, I think that's just dominating. Given that there hasn't been sort of a definitive answer to what's happening with the war, it makes sense that we're seeing a retreat in oil prices. But, as you mentioned, we're still up, right, compared to where we were prior to the resumption of hostilities.
Yeah. I put some gas in the old car this past week, and it wasn't cheap. I'm just going to say. Now, mind you, I was near a big highway, and you always get, but nonetheless.
Did you get to pump your own, though?
I did.
You did, okay.
I was not in New Jersey,
okay.
which is always a bummer. So Israel, Chris, we've got to ask you. I always feel like we have to factor this in. As you mentioned, Israeli Prime Minister Benjamin Netanyahu will be in town meeting with President Trump. That's happening tomorrow. The president says he plans to press, or I should say, Benjamin Netanyahu plans to press U.S. leaders on keeping a constant watch on Iran's nuclear program, one of the many issues kind of now in limbo, as we know, following kind of the back and forth here. So I feel like even on Air Force One earlier today, President Trump made some comments. I have a little difference on Iran when it comes to Prime Minister Benjamin Netanyahu. Israelis' roles, Israelis' actions have to be considered in all of this, yes?
I think so. And I think a lot of people are observing, the president over the past few months. They recognize that he's getting very frustrated with the pace of this war, the failure to achieve objectives. And Israel certainly wants to make sure that the U.S. doesn't just back away to, in response to oil markets, in response to potential, equity market shocks, et cetera. I think the concern for both sides is to make sure that, they stay on the same page, at least when it comes to the Iran theater. There's the other issue, which is that, as we've been, writing about, my colleague Becca Wasser, about the lack of munitions, the lack of the ability to continue intercepting ballistic missiles. Israel has been notably spared over the past week or so from some of Iran's attacks prior to this pause that happened over the weekend. But of course, if hostilities resume, then we get into additional pressure on these interceptors. And other Gulf countries are still, they're also looking at their ability to defend against these attacks as well. So
I'm glad you went to
challenge.
I'm glad you went to magazine depth, Chris, because I have a different question about resources or U.S. assets, and this has to do with human beings. The president, as Carol mentioned, said on Air Force One that he's got plenty of time when it comes to this conflict. I think some folks who may have family members in the region who've been there for months at this time might might argue otherwise. And I'm wondering when this part of the conflict begins to take a toll even more so on the folks who are there and then the folks who are home here.
Yeah, well, it's really unfortunate that we haven't been able to get clear and consistent information out of the U.S. government on the service members who have been harmed as part of this conflict. It seems like they've revised the way in which they're reporting that. But of course, this was a major concern over the weekend. I was speaking with somebody who has a family member over there, and they're very concerned about what's going on. And, the longer this goes on, the more casualties the U.S. Experiences from this conflict, the more pressure there's going to be to wrap it up.
All right, we're going to leave it on that note. Hey, listen, Chris, always do appreciate the updates you give to us out of the White House and what's going on, certainly with this war. He is, of course, our Chris Kennedy. He's Bloomberg Economics Statecraft lead, joining us from our D.C. bureau. We're going to stay on news out of D.C. In the meantime, though, we do also want to mention that President Trump has made his way to Michigan. We are just tracking some events that are happening on the ground there. He is expected to make some comments later on this hour in Milford, Michigan, talking about affordability and tariffs. Our expectations in terms of his comments. Keep in mind, we're counting down to those midterms, so some of that has got to be top of mind for him. In the meantime, I think he was viewing an auto drag race. I don't know if that happened yet, or whether
he was
that's about
speaking
to happen.
to executives from General Motors earlier as well.
Yeah. So.
Yeah, it says that this is the proving grounds for General Motors. Where's Matt Miller when you need him? He spent a lot of time in those parts. The question I think a lot of Americans have, and I think a lot of Republicans too, have heading into the midterms is, to what extent can the president get that message about affordability across to Americans who may not actually feel like they are in an environment that is more affordable than it was 2 years ago?
That's a really good point, right? Amid all this also, continuing ongoing backdrop of the war like we just talked about with Chris Kennedy. Hey, we do want to get to one of the co-hosts of Balance of Power, Joe Mathieu. He's just off an interview with House Democratic leader Hakeem Jeffries around Democratic priorities in the 99 days until the midterm elections. Before we get to Joe, though, here's what House Democratic leader Jeffries had to say to Joe about the U.S. war in Iran.
Well, we're going to continue to aggressively push the effort to push back against this reckless war of choice. It's deeply unpopular with the American people, and we have to sustain the intensity. Donald Trump has unfortunately got us involved in this situation without any plan, any objective, any clear exit strategy, and now the American people are clearly paying the price. One of the things we have to take a look at is the amount of taxpayer dollars that are being spent to fund Donald Trump's reckless war machine and effort in the Middle East. It's clear to us that the American people would much rather their taxpayer dollars being spent to make their life more affordable.
All right. That, of course, was House Democratic leader Hakeem Jeffries earlier today with Joe.
I want to bring in Joe Mathieu of Balance of Power here on a Bloomberg Businessweek Daily. Joe, it's always good to get some time with you fresh off your conversation. I want to start with what Jeffries had to say about the U.S. war in Iran. We just talked about the segment before you, the president's pause when it comes to U.S. attacks in Iran. This, of course, comes ahead of, very close at this point, to midterm elections. What did you hear from him about the way that Democrats are positioning themselves amidst this conflict?
Well, it just all comes down really to one issue. I mean, we talked around the war powers issue to an extent, but this is a story of affordability. As Hakeem Jeffries is concerned, he was in Pennsylvania yesterday on what, by the way, was 100 days, guys. You can start your watches until the midterm elections. Today is 99 days.
Amazing.
And so they're really trying to crystallize their messaging, and it's affordability, which is, I guess, ironic because that's exactly what the president's talking about today in Michigan. By the way, they did the drag race already. He's out there at this GM testing facility with Mary Barra, and Secretary Duffy is with him. They did a drag race for about 7 minutes, which is not why he's there. He's going to be talking about the issue of affordability with $4.11 today, the average price for a gallon of gas. And that's because of, we all know what's happening in Iran. So, yes, this is the opportunity for Jeffries and other Democrats to seize on the same issue that Republicans ran against Joe Biden on.
So what are the Democrats then putting out as an alternative? You know, I always feel like everybody, Joe, is like, yep, affordability. But what are you going to do specifically? Because, yes, there's the war and the impact on energy prices, but it's not just energy prices.
Yeah, and you're getting to the big question, which is, what are you for? Can you win by just running as someone who opposes Donald Trump?
Right.
We got into that in our interview, and we'll play some of that on the late edition of Balance of Power. Jeffries does have an answer to it, beginning with repealing, and this is a pretty tall order, what the president calls his big, beautiful bill. They want to extend Affordable Care tax credits. Remember, there was a huge debate over that at the time. But going back and cracking open that can of worms with what could still be even if they do win, slim majority, might be very difficult for Democrats to pull off. And if they don't have the Senate and if they don't have the White House, that would potentially be impossible. I asked him about suspending the federal gas tax, for instance. He didn't even touch that in his first answer because they see this as really just one answer, and that's ending the war.
Yeah, I guess too, Joe, I think a lot about what comes in January once there is a new class and we do potentially see some new faces in the House and the Senate and what that means for President Trump's agenda.
Yep, that's for sure. Look, everything is kind of on ice until the election. The big question right now is, can they fund the government? The House passed a continuing resolution last week. Now it's up to the Senate. Can you imagine, guys, we're in such a world of dysfunction that in August, we're throwing in the towel. The government doesn't have a funding deadline until September 30th. But they said, because of the election, we're just never going to be able to figure this out. So let's do it. We'll kick the can right now until a date past November. And that's exactly what they've done. Now it's up to the Senate to codify that and get it done as well. That is the dysfunction that's informing both parties as they go into this election.
Yeah, I tried that on my bosses. I just can't figure out the answers, Joe, and I'm just not going to get to it.
Let me know how you get it. Yeah.
It doesn't work. I'm here and I'm doing it. No, I'm just kidding. I do think about, though, in terms of, I want to just go in a weird, but campaign financing. Money coming in to back the midterms. I thought I was seeing things where Republicans, lots of money coming in. What do we know?
This is a big deal, and we talked about this quite a bit as well. So, Democrats have history on their side. They say it's a midterm cycle with the majority party owning both ends of Pennsylvania Avenue, so that would tend to lead itself to a Democratic advantage in this election. But Republicans do have the financial advantage, at least on the party level. The RNC has about $30 million more than the DNC. It also doesn't have any debt. The other side to that coin is that on the campaign level, if you talk to the DCCC, they'll tell you that their candidates are in many cases outraising their Republican counterparts. When you put that together with what could be an historical advantage, Democrats feel pretty good about that. But look, if you believe, as history shows us, that money is the mother's milk of politics, this is an issue. And that's why there has been a bit of a circular firing squad when it comes to leadership at the DNC, namely Ken Martin. And that's something that we talked about with Jeffries as well. It's just different when you look at the party level versus the candidate level. There's a big disparity in money as well.
So, Joe, just 30 seconds left here. 99 days until the midterms. That means 100 days until you're talking every day about 2028 in the election there. Who are the three names we're going to be talking about then?
Yeah, 99 bottles of beer on the wall. I think it's probably the same names that we keep talking about. Hakeem Jeffries was with one of them yesterday, and Josh Shapiro. Gavin Newsom wants to be invited to that party. Pete Buttigieg. We're still waiting to hear if Kamala Harris has ambitions. But, I'll tell you what, this early in the cycle, we always look back at that conversation and say, wow, we weren't even close.
That's what makes it so interesting, and you guys cover it all. Joe Mathieu, thank you. Co-host of Balance of Power. Catch him again coming back at 5 p.m. Wall Street time right here on Bloomberg. Hey, coming up, the latest move by NVIDIA reigniting the circular AI fears. We get into that next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow higher, the S&P, NASDAQ, and the NASDAQ 100 index all declining. This is crude slumps. West Texas Intermediate crude now down almost 8%, 82.23 a barrel on WTI. Brent 88.05 barrel of Brent crude now down by 9%. A sell-off in chip makers sending stocks falling, overshadowing that decline in oil prices. Very often we do see oil decline, stocks move higher. Not the case today. The S&P is now at 73.96, back below 7,400, down 16 points, a drop of 0.2%, with the Dow up 129. Dow Industrial is up 0.2%. The Nasdaq 100 index down 0.8%, and the SOX, the Philadelphia Stock Exchange's semiconductor index, down 3.7%. A Fed decision coming up on Wednesday with a 2-year currently yielding 4.32%, the 10-year 4.64%, and the 30-year 5.12%. Gold is up $22 the ounce to $4,075. That is a gain now of 0.5%. Cracker Barrel CEO is stepping down nearly a year after an attempted rebrand of the chain led to a fierce customer backlash. Cracker Barrel says CEO Julie Masino will be stepping down next month, but will remain with the company until October 9th in an advisory capacity. You'll recall even President Trump weighed in on the rebrand saga, calling on the company to restore its old image as other critics accused it of erasing elements of traditional Southern culture. Cracker Barrel shares down now by 2.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is the Bloomberg Business Flash.
All right, Charlie, thanks so much. Hey, it's a big week for tech earnings in the AI story. Meta, Microsoft, Amazon, and Apple all reporting results this week.
And then there's the NVIDIA news that started coming down late on Friday. Heads up on it from Bloomberg's Ian King. Ed Ludlow all over it, too. He also caught up with Jensen Huang on Friday in an exclusive interview. This after Jensen attended Korean AI Summit and met with South Korea's president.
This is the golden ages for Korea, as you know. Their semiconductor business is booming. Their industrial business is booming. You know, this is a country that has the ability to help the world build out the AI infrastructure. That they're incredibly adept at adopting new technologies, and is a really technologically forward-leaning society. And they love using AI. AI has really diffused throughout their society and their industry. My guess is that the semiconductor industry is probably going to have to be 10 times larger than it is today over the next decade or so. And so working with our partners in Korea and around the world to scale up the supply chain of semiconductors so that we're prepared for this AI future is really important.
All right, that, of course, was Jensen Huang of NVIDIA, along with our Bloomberg Tech Bloomberg Tech host, Ed Ludlow, who was working into the wee hours, it seems like, on Friday. Ed Ludlow, I don't even know when you sleep anymore. He's, of course, host of Bloomberg Tech on Bloomberg TV. Catch them at 11 a.m. Every Monday through Friday on Bloomberg TV. Hey, Ed, there's a lot of stuff going on with NVIDIA. There's the $500 billion deal with SK Hynix, the memory chip giant, to build, more than 2 gigawatts of AI data centers on the Korean Peninsula. They're investing $1 billion in Naver Corporation to help finance an AI data center under construction in South Korea. And then there's NVIDIA in talks to financially back and help an OpenAI lease a $500 billion data center project. As I said, it's a lot. Make sense of it all for you, for us.
Yeah, they're all feeding into concern in the market. Like the stock's down 5%, right? And the conversation around circular financing is back. But let's take the SK case study first, right? $500 billion. I asked Jensen, what does that mean, $500 billion? Remember, SK Group is a conglomerate. So what it literally means in his explanation is that represents some of it NVIDIA buying memory chips from SK Hynix. SK Hynix has 60% market share in high bandwidth memory, the memory chips that goes into data centers. But SK Group also has SK Telecom, a telecoms company that has its own ambitions to be an AI data center play. They buy NVIDIA chips from NVIDIA. So there is some more specifics to what the 500 billion represents, or $500 billion, as Jensen likes to frame it. But the concern around the circular financing as it relates to that case study is which proportion is going in which direction? What's contractual and what's not? What's the timeline for it? It's a many multi-year agreement. So the market's kind of taking a beat here and saying, what is that?
Is this why NVIDIA is under pressure?
I think the circular financing is feeding into it in the market today. You know, people I've spoken to on the NVIDIA side would acknowledge that. what Bloomberg's reporting and many other outlets reporting on OpenAI is something very different. First of all, because it's reporting based on anonymous sources. NVIDIA and the companies involved have not commented on it at all. But there's two parts to it. NVIDIA becomes a financial backstop for a data center in Ohio, according to our reporting, where it says, OpenAI, you want to lease this data center capacity. We will be a guarantor of your finances up to $250 billion. At the same time, in the reporting, NVIDIA is saying they will finance themselves OpenAI being able to buy $350 billion of chips from NVIDIA. That's a much more explicitly circular arrangement. None of the companies have commented on this publicly, but it's another reason why we woke up this morning and the world was like circular financing, and we're worried about it.
Ed Ludlow, I'm just going to say it. You're super smart. You follow this stuff, the ins and outs.
You want the
constantly.
truth?
No, I don't. I know the truth. I mean, the circular AI concerns, it feels rather legit here. No?
On the OpenAI side, again, if you were just to put it in one sentence, it is NVIDIA giving financial support to the companies buying its technology. Right. Now, there are many in the markets that see that as completely constructive, because the environment is demand vastly outpaces supply. And as Jensen explained in that clip that you played as part of the interview, to their mind, they're greasing the wheels. They are allowing for this infrastructure in the real world to get built faster. They don't want money or capital to get in the way of it. They don't want their customers needing to pay their invoices to stop the projects getting in the way. And there is certainly an acceptance from some in markets that that's the case. The concern, very explicitly, is that it is artificially, pardon the expression, inflating values, and that it is artificially propping up something, that the real terms financing or demand isn't there. Well,
Ed, this is sort of a philosophical question, but it also has a lot to do with what we've heard. I mean, I think it's fair to say over the last 2 years from Jensen about what the world will look like. But in order to justify all of this CapEx and this investment, what does our world look like in 2, 3, 5 years from now?
Well, the overall expectation is that capital expenditures will be much higher in 2 years' time than they are today. And the idea that in aggregate, those 4 key hyperscalers and throw Oracle in there too, between them account for way over $1 trillion of CapEx annually. That is the expectation at this standpoint. What's different this week, so we get some major technology earnings Wednesday and Thursday after the bell, is that it used to be the case that the hyperscalers would raise CapEx and then show top-line growth, and the next day the stocks would be higher. That was really cheered by Wall Street. There is now much more scrutiny, which is maybe why this circular financing story has kind of come up this morning, where just showing top-line growth overall isn't good enough, that they want much more different types of evidence that raising CapEx is because there is multiple facets of demand out there for whatever the AI technology is they're working on. We went over this last week with Mandeep, right? Mm-hmm. Alphabet gave many metrics: Gemini use, enterprise use, tokens per minute, all these different data points, and the stock still fell 7% because the bar was really high in this environment.
I'm not going to get this right, but you brought up something on our call today. But is this like steelmakers owning the railroads, right? So that the railroads can move stuff around.
Yeah.
I don't know, but we needed the railroads.
That's a good one. I mean,
that was a good thing.
So it's highly analogous. If you go back to the SK case study, NVIDIA is supply constrained for memory chips. They need SK Hynix, already their biggest supplier of HBM, to produce even more HBM. They need SK Hynix to get going on that. And what NVIDIA is saying is that within this $500 billion figure, which is a very large number, a chunk of that is them placing in advance lots of orders for current and future generations of high bandwidth memory so that SK has the confidence to invest into the capacity. That's a part of it. Bringing it back to the worry in the market today in circular financing, how much of it is that? How much is that part? We just don't know proportionately what's binding, what's not binding, what's just a sort of letter of intent. Now the burden of proof on these companies is higher. People just want more information.
So then let's take what we learned from Alphabet last week and push ahead to what we're going to hear this week from Meta, Microsoft, Amazon, and Apple. Apple is I think it's fair to say, Ed, at this point, Apple is in a league of its own. And it's been like that for many years and at many different points. It's fair to say that. But in terms of the way that it's returned for shareholders this year compared to some of these other companies, Meta's down, Apple's up more than 20% so far this year. How does it set us up for what we're going to hear from these other four of the Mag 7?
I'm just looking on my Bloomberg as well, because I think the trade today literally means that Apple is once again the world's most valuable company. 4.9 trillion, because NVIDIA's come down so much to 4.7 trillion. Apple's the outlier, right? It doesn't have a capital expenditure.
Higher this year.
Yeah, it's been the outperformer, but the market, I think we covered this really well in the last earnings cycle. Like, they started to get credit for being the non-capex story. So for a long time, the market was frustrated with Apple because it was behind on its AI story, but they kind of were like, you have all this cash, like, what are you doing with it? Like, you know, are you aggressively investing into talent? Now that the stock's been insulated because it doesn't have the capex story, it still comes down to the installed base of devices, the iPhone, their strength in markets like China, while they kind of feed through their plans for Apple Intelligence and the Apple version of Siri. Again, that's kind of what earnings will come down to for them. Higher memory costs is the bit that's common to all of them. Because why are memory prices higher? Supply is tight. There's competition between the data centers and the consumer electronics names to get hold of it. And Apple is like the master of managing the bottom line, but they're still dealing with the same macro environment everyone else is.
Right.
So how well they perform is really a big story.
Hey, speaking of memory, what do we know about CXMT? Debuting in Shanghai, company's now China's largest, the world's fourth largest manufacturer of DRAM chips. Is this a company to be taken seriously? What do we know?
Yeah, I mean, it's now the fourth largest maker, but quite far behind the other three. They're like quite big. You know, the milestone is extraordinary. That in this IPO, this debut, it's become China's most valuable company in mainland China, mainland listed as opposed to Hong Kong listed. You know, they are the poster child for through the memory chip context of China wanting its own domestic industry and its own domestic champions. And, you know, there are lots of different Bloomberg stories out there on the terminal and on the website today. Read as many of them as you can. But the interesting part is that, and part of this is our reporting about Apple, right? Apple wanting to diversify its memory supply. CXMT has some evidence that it's been able to do business internationally.
Interesting.
And so, you know, that's where Micron, SK, and Samsung would be more looking over their shoulder potentially. It's
a reminder, right? Demand gets out there, more supply comes on the market, prices come down, like hence the semiconductor cycle eventually.
Yeah, and in an IPO, you generate proceeds, use them to build capacity. Pretty simple.
Or pay your workers, as the CEO apparently is doing.
Bonus.
But there's a little pressure from the government there. You are smart. I told you. I got it right. Ed Ludlow, host of Bloomberg Tech. Catch him on Bloomberg TV. We're going to talk workers and AI when we come back.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. After initial gains out of the gate this morning, we're looking at a down day now for the S&P 500 index. You run the GIP screen on the Bloomberg, and we are very close to session lows on the S&P right now, trading below 7,400, 73.90 now, down by about 0.3%. NASDAQ and the NASDAQ 100 index are moving lower. Chip makers being hit hard today. Right now, the NASDAQ 100 index is down 0.9%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 4%. All of this with a 2-year, 4.32%. The 10-year ahead of the Fed decision on Wednesday, 4.64%. And the 30-year currently yielding 5.13%. Gold is up $20 the ounce to $4,073, up by about 0.5%. Major move to the downside for crude. Very often we see crude sell off, stocks rise. Not the case today. We've got WTI down 7.5% right now at 82.63 a barrel. Barrel of Brent, 88.41. Brent crude down by 8.9%. Shares of meat packers Tyson Foods and JBS are surging. This after the United States said it would resume cattle shipments from Mexico, easing a domestic shortage that has led to higher costs for their animals. Tyson up now by 6.6%. JBS up by 9.9%. Monthly Monthly ridership on the Long Island Railroad, which is the nation's busiest commuter rail line, has now surpassed pre-pandemic levels for the first time. This is a hectic and fun New York City summer boost to trips. Carol and Tim, that's a Bloomberg Business Flash.
All right, interesting. Wow, that took a while, right? If you think about it.
We'll see if it's permanent.
Yeah, no, but I mean, right.
Yeah, it did
right.
take a while.
But it took a while if you think about, 6 years ago, 5 years ago? I don't know, we don't want to go back there. All right, we're going to get an update on how U.S. central bankers see the labor market inflation picture in the U.S. That's thanks to the Fed decision that comes on Wednesday. And we'll see whether Fed Chair Kevin Warsh makes some commentary.
They're sharpening their pencils in Washington, D.C.
Do you think they have like...
Booting up the Bloomberg terminals.
Like in that
they're ready. They're ready. Yeah.
They're ready. And I'm curious in the commentary whether we hear about AI impact on the workforce and also on inflation.
Look, I'm not a betting man, but I'm going to say yes and yes. Those questions will be brought up, or at least some answer will be given that relates somehow to that. And we heard that from the Fed chair just a few weeks ago when he was in front of Congress talking.
Right, and all those task forces, like the things that they're going to be looking at. Hey, ahead of that, there's some research out from KPMG and UT Austin's Macomb School. It was published in the Harvard Business Review. And the research found that workers don't all need to be nervous over AI taking their jobs. There are some thoughts, some caveats, though, to it. Here to explain...
Did AI write it?
Hey,
don't worry.
Hey, don't worry.
We got this.
I'm good.
Yeah, we got this.
AI, good person. Rahsaan Shears is AI Enterprise Transformation Leader at KPMG US. She joins us from Atlanta. Rahsaan, nice to have you here with Tim and me here on Bloomberg Businessweek Daily. Briefly tell us what you guys looked at, how this study and research was conducted, and what were some of the key findings.
Absolutely. We started with a look at over 500 of our early career professionals, those who had been working less than 18 months. And we really broke apart the work that they needed to do between planning, integrating, and monitoring work, and then set out to study really what makes you most impactful and effective in working with AI. Particularly for this demographic, because their work is more disrupted by AI than maybe other segments of the industry. But we wanted to understand how we could continue to drive value in this segment of our workforce. What we found in this study with the University of Texas is that our participants fell into three categories. Amplifiers, those who really know how to achieve an outcome that exceeds the AI baseline. Delegators, those who hand off their work and really only receive whatever the A slide does and perform at the AI baseline. And apprentices, those who, in fact, have the same base skills, if you think critical thinking, knowledge of industry, knowledge of subject matter as the amplifiers, but lack the ability or the understanding of how to apply that to the AI, which put them in the apprentice category. The thing that was the real unlock, the aha, is that it wasn't the core skills alone. It was really the connection to how those skills are applied to the AI that really delivered the most value, showing in our view and with the UT study that learning is possible to help everyone move.
So I want to break in. You're sitting down with your best buddy at a bar or not, having a non-alcoholic or an alcoholic beverage, and they say, is AI going to take on my jobs? You're going to just say briefly what?
I'm going to say no. Those who get the most out of AI are going to take the jobs. And that's why helping more people learn how to use AI as a thought partner and really exceed what the AI baseline can do is where we want to get more people to. And the earlier you learn that in your career and apply that, the better off that you're going to be.
So this is relevant for people in July of 2026, but we've seen the pace of how quickly things move here. And in a world where everybody's trying to achieve artificial general intelligence, I wonder how relevant this research will be in just a couple of years. How future-proof do you think it is?
You know, it's a great perspective. We looked at this research with ever increasing capacity in the AI. And what we found in each case is that the human effect, really the human using AI to provide additional context to it, using it as a thought partner, continue to exceed the AI baseline, showing clear evidence that as much as the AI advances, the human difference continues to make a huge impact in how you achieve value.
So there's a bunch of kids coming out of college or getting ready to figure out what to study and just saying, what do I do? What do I do? So First of all, how does academia or all kinds of learning institutions have to adapt? Do we even need 4 years anymore because AI is going to be taking over a lot of skills? Or what do we need? And how should the next generation be getting ready for the workforce?
What I think is really exciting that this research found, and what our colleagues at the University of Texas are continuing to advance, is that teaching students and those who are going back to up their skills how to use AI as a thought partner, as a tool to get more, to do more, to expand your capability, but providing the opportunity to really immerse yourself in exercises and learning that allow you to advance your skill of challenging, using your critical thinking to frame how you question and interrogate the AI is what makes the difference.
Well, it's so funny
those
that
things can be taught.
It was so funny. There was something my husband and I were talking about, and he was like, I'm going to just ask AI. I'm going to ask ChatGPT or something. And he did this very in-depth question. I'm like, that's actually how you need to ask AI questions.
Was it right?
I can't.
What was this about? I need to know more about this.
I can't remember.
All right.
Is that crazy?
Well, ask him
But that was definitely amplifier behavior and not a delegator, because he didn't just ask a simple question. You talked about the fact that he asked a very in-depth, intentional question.
Yes.
And that positions you to get the most out of AI.
It had to do with putting a stove fan in a historic district on a really old home.
That's cool.
But it kind of went through all these different parameters and what you need in terms of airflow and da-da-da. But he went through it, and I'm like, that's how you ask a question on AI. So we're going to...
So then when you bring the plans to the city, they're going to say, this is wrong. This isn't going to work.
ChatGPT.
That's where he needs to provide additional context and make sure that instruction is in the context of what you have to take to the city.
So... are people going to still learn all those critical skills we learn in our first year? I think about my first couple of years in this industry. Learning curve was steep. I got yelled at a couple times in a control room, but I learned so much. Are people going to have that experience still, which I think is kind of important?
Absolutely. It's how they will learn it will change. So instead of maybe being stuck in that moment, you're going to be included in some immersive training that's going to simulate that for you so you can develop those same muscles, learn the same techniques, and also actually prepare you to then take that and challenge AI with it to extend the value that you're able to deliver earlier in your career. So yes, those skills are really important.
Yeah.
But what is becoming more important is your ability to take that and translate it to how you work with AI.
Rahsaan, really interesting stuff. Thank you so much for dropping by. Rahsaan Shears, she is AI Enterprise Transformation Leader over at KPMG US, joining us from Atlanta. I think about your kids, because much younger, obviously, than my daughter, but a lot can happen between now and then. In terms of AI and, right?
Yeah, they're actually, the eldest is like, he'll see something and ask if it's AI or say like, that's AI. So there's like this baseline knowledge that didn't exist for, any of us as children, that they at least recognize the technology, but
kind of growing up within it.
Yeah.
Right?
But, cabin in the woods, that's my plan.
Cabin in the woods. Deal. Hey, listen, don't go anywhere. When we come back, a check on trading and stocks on the move. You're listening and watching Bloomberg.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, coming up on the last hour of trading here on this Monday. It's a busy week. It's kind of almost overwhelming in terms of a bunch of Mag 7 coming our way, Meta, Microsoft, Amazon, and Apple.
Oh, and there's a Fed meeting too.
Oh, yeah, all on the same day.
Yeah, it kicks off tomorrow.
Yeah. We'll
wait till Wednesday to hear from Fed Chair Kevin Warsh, his second meeting as new Fed chair.
Second meeting.
Okay. I don't think he'll do that during
Wouldn't
the
that be
press conference.
fun,
That press conference is set, though, for
Yes.
2:30 on Wednesday, Wall Street time. We'll bring it to you live.
Communications still continue, right, from the Fed chair afterwards. I think there was some question or something. I thought it was interesting when it came down. I'm like, I just assumed he was going to do the press conference.
I had the same thought. In fact, I forwarded the email to Mike, and I said, isn't this the same as what always happens? And he replied and said, actually, yes, but there was, there's been no official sort of like communication about it. So now we know.
All right, now we know. Hey, we're looking at a day where we are little changed on the S&P 500, just down, not even 3 points here. Dow is up about not even 0.4 of a percentage point. And then you've got pressure on the NASDAQ down almost 0.5% here. We are coming off our worst levels of the session, but semiconductors, you're seeing a fair amount of selling. What's interesting, we are seeing some software stocks, like application software stocks, actually performing as semis are under pressure.
Yeah, stocks down over 3%. In fact, you don't have every name in the stocks lower today. You still have 5 stocks in the stocks that are higher, but 25 are lower today. Skyworks is up, Qualcomm is up, ARM Holding and On Semiconductor are all higher.
All right, so let's get to it. Let's get to some stocks on the move. I'm Carol Master along with Tim Stanovic. Let's get to our own Avalon Purnell. She's Bloomberg News equities reporter. Interesting day in terms of kind of sectors that maybe, we always talk so much about big tech and so on and so forth. Some interesting other moves in the market today.
Yes, definitely a lot happening outside of tech. We can start off with oil, which Baker Hughes, that's ticker BKR, currently jumping up a little more than 5.6%, most intraday since April, and that's after the oil field services firm reported profit for the second quarter that really surpassed estimates. The firm also boosted their full year guidance on industrial and energy technology orders through 2028 amid increasing demand, which is kind of interesting considering we're seeing oil fall a tiny bit today. But Citi also highlighting that given the earnings beat and also the fact that they are managing to do this from those revenue headwinds from the Iran war, it really is a beat on all cylinders.
Love that. Yeah, interesting. Some outperformance there among one of the energy names. Hey, let's go to Hypercore Therapeutics. This is kind of your world, isn't it?
It is. And it's kind of interesting since we did write about it a little while ago. That's ticker CAPR, currently plunging about 65%, most intraday since 2002. And that's after the FDA flagged several concerns about their clinical trial data for the biotech's drug ahead of a very key panel this week. In current documents or their briefing documents they released today, Cantor writing that the briefing documents really paint an ugly picture of the company's drug ahead of their meeting later on. And also worth noting, though, not everybody agrees with that opinion. Oppenheimer actually saying that they would still own the stock into that Wednesday meeting, and they believe that this drug could still actually get approved. But definitely a lot of question marks.
I mean, this stock's under some serious pressure this year, down more than 76%. Market cap is just shy of $400 million. About 160 employees, according to the Bloomberg terminal, based out there in sunny Southern California.
Is this on your decliner list?
Should be.
Should be.
Yeah.
That's for sure. It's definitely to the downside.
65.3% right now.
Yes. A big drop. On the flip side, meat producers having a good day.
They sure are. We can look at Tyson Foods, which is ticker TSN, currently up about 6.4% today, most intraday since May 4th. And that's after the U.S. Department of Agriculture officially confirmed that Mexican cattle imports can resume in about 30 days or so after over a year of border restrictions related to the screwworm, which obviously you don't want to have meat that has screwworm in it. Citi also writing that they see this as a very positive catalyst for the sector as a whole. And you can really see other names like Hormel, JBS, and others that are also moving up on this notice. Though they do believe that JBS may actually be the biggest one to actually benefit from this, given the fact that it's been a tough year for meats, and they have the leading exposure in U.S. beef.
No, we've been talking about, I feel like, the meat world for a while in terms of herds, smaller declining herds, right? And it's been a big issue in terms of prices.
So speaking of prices, the reason these are higher is because this could benefit domestic meat processors. They've been paying higher prices to compete for scarce cattle. So if they're paying less, does that mean we're paying less for burgers?
It kind of depends.
Yeah.
I mean, that's not the only place where we get meat, but definitely something we'll keep an eye on. There's other things that will also play a role, obviously, as well.
Mexico used to send over 1 million head of cattle to the U.S. each year, largely younger animals who are then raised and processed in the U.S. That trade has largely been halted since 2024 to prevent the spread, as you said, of the New World screwworm parasite. I certainly don't want to eat any meat that's impacted. I don't want to eat any food that's impacted. I don't mean to laugh. It's just sometimes it's silly. I don't know, food production. It's a serious thing.
Yeah, we're not even talking about the
Cyclospora.
challenge. Exactly,
No.
the challenges facing some of the
Talk too
produce
much about that,
companies.
man. Yeah, there's a lot of reporting over the weekend. Thank you so much. Really appreciate it. Evelyn's going to be back later on. Evelyn Purnell, Bloomberg News equities reporter with Stocks on the Move. Check out our Stock Movers podcast. 5-minute episodes, big winners and losers in the stock market. Find it on Apple, Spotify, or anywhere you get your podcasts.
Hey, coming up next on Bloomberg Business Week Daily, Robert Schiffman is kicking it off at the top of the hour. We're talking about the circular AI fears. That's next on Bloomberg Business Week Daily.